So in this video, we're going to talk about everything that you need to know about ATR bands. We're going to go over what ATR bands are, how they are formed, and also we're going to talk about a profitable yet very simple trading strategy that you can use in order to take profitable trades in your trading. So without any further ado, let's get started. First of all, let's understand what average true range or ATR means. And the formula, the first step in calculating the ATR is to find a series of true range values for a security. So in our case, the security is AUD JPY currency pair, okay? And the price range of an asset for a given trading day is simply its high minus low. So here, whenever we are trading, the maximum high that a security, or in this case the AUD JPY pair, reaches in a day minus the maximum low that this pair reaches will be the average true range at the true range of this AUD JPY pair, okay? And the true range is more encompassing and is defined as TR is equal to maximum high minus low, as we just studied, or absolute high minus closing price, the previous closing price. So as we just saw in this formula, that true range is the maximum high minus the maximum low, whichever the maximum high and low is for a given trading day, okay? So then the average true range, when we talk about the average true range, then this simply means that for each candle we know that there will be a different value of the true range, because each value will correspond to different calculations in the back end. So for each value of the true range, there will be different number or different value on the candle, okay, on each candle. So with each candle, the average true range is updated. And just like we calculate the moving averages, there is the formula, or we can calculate the average true range as well, in which we specify the number of periods we want to use in order to calculate the average of true ranges for previous candles, just like we do in case of the moving averages, in which we take close as a reference and then we give the indicator the number of days or number of periods we want to calculate the moving average to be. So in this case, if we apply the average true range indicator, if we go to its setting, we can see that there is ATR period, which means how many candles we want to use in order to calculate the ATR value for a given candle or for the latest candle. And then we have the ATR band scale factor, and this factor determines how much far do we want the upper and lower band to be. So in ATR band or in ATR value, there will be a single value, but we can scale it and we can factor it by a multiplier in order to put two bands instead of just one true range, average true range band. So here we can see that the two bands are this upper band and this lower band. So this is how the average true range works. It's just simply a range or the average of the true ranges for a given number of candles. And then in order to discuss about the trading strategy, we are going to use the exponential moving averages indicator along with the ATR bands. And the strategy is very simple. So whenever you are trading the ATR bands, apply the EMA indicator on the charts and set your EMA period to almost 63. So this will be a long period exponential moving average. And in order to determine the bullish trades, you should see if the current values of the candles are above the EMA, okay? So this 63 period moving average, exponential moving average. So when the market is above this moving average, then that means that the market is moving in the bullish direction. Now we are good to take the bullish trades or long trades. And whenever you spot any candlestick pattern forming inside these ATR bands, you should take a bullish trade. So as you can see here, on the formation of this bullish pattern, on the close of this candle, we will take the bullish trade. And in order to close the trade, what we will do is we will wait for the market to either hit or either touch this lower band or if the market touches this EMA value. So as you can see here that there is another formation of this bullish candle, so we will place another buy trade, and here we can see that the market touches this EMA line, so we will close our trade here on this place. And then again here there is the another buy signal or buy bullish candlestick pattern, and we'll place another long trade. And if we keep going forward, here you can see that the market is again touching the EMA line, so we will close our bullish trades here. Okay, so this is how you can use the average true range bands in order to take bullish trades. Now if we go ahead and discuss about the bearish trades, the strategy is same but a little bit opposite. So in case of bullish trades, we want the market to be above the 63 moving average EMA. Okay, but in case of bearish trades, we want the market to be below 63 period exponential moving average. So in this case here, the market is moving below the 63 period EMA, and whenever we spot any candlestick pattern that represents that the market will continue to move in the bearish direction, we will take a short position. So there is this indication, we'll take the sell trade here, and then again here is another sell entry, and here as well. So these are all the sell entries, and whenever we see the market touching the exponential moving average line, we'll close our bearish trades. Okay, or if the market touches this upper band, then we will also close our short positions. So this was a very short but very effective strategy for using the ATR bands, and I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share and subscribe. See you guys in the next video. Thank you.